All right. Good morning, good afternoon, good evening, wherever you are. Welcome to the Inner Circle Live pre-New York session. I'm your host for today's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're definitely happy and grateful that you're here with us this morning to take a look at the technicals and the fundamentals of the Forex market to see what we can take advantage of. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. So if you all can hear me loud and clear, do me a huge favor, drop me a one in the chat. Let me know you're all ready to go for this morning's session, and we can get this thing started. Had a few technical difficulties this morning, but I think I am all good now. All right, so we're good. We see the ones coming in. So let's jump right into the charts because this morning, as a matter of fact, I'm not going to jump right to the charts. I apologize for that. We want to make sure that we go over to this Forex factor because I was getting a little bit ahead of myself. I wanted to jump straight to these pound pairs, but we have this morning at 7 a.m., just under a half an hour from now, we have the monetary policy decisions, bank rate statements, and everything coming from the Bank of England at 7 a.m. And so then at 7:30, we have Governor Bailey speaking. And then here in the United States at 8:30, we've got unemployment claims, and then we've got ISM services PMI coming out. So a busy day, especially for the UK. If we go over to the trading economics, we have that the Bank of England is set to raise rates for the 14th time. So investors are betting on 25 basis points to hike to 5.25. But right, so there have been increased speculation. There has been increased speculation that we may possibly see a second 50 basis point increase. Okay, so if that happens, don't be surprised if we see right a decent bullish move out of the pound. Okay, so if we've got increased expectations for the possibility of 50 basis points, if we see 25 basis points come through, for one, that 25 basis points may be already priced in. Two, if there's growing expectations of the possibility of 50 basis points, you may see the pound move in a downwardly direction in regards to the price action if we come through with 25 basis points. So this is kind of like, hey, let's that wait and see. Let's see what happens. And it says here, regardless of the size of the rate hike, borrowing costs are reaching fresh 2008 highs as the central bank continues to battle high inflation. Okay, so one of the things that you always want to take, because if you watch the news and you watch the shows and everything, emotions will get caught up, right? And interest rates are moving high. It's crazy, but you can see here that it says borrowing costs are reached a fresh high, reached fresh highs, fresh 2008 highs. So we've been here before, everybody. We've been here before. The market just got addicted to zero interest rates coming out of 2008. With the pandemic and everything. After that, 2020. But we have seen rates like this. Okay, so always keep that in mind. Also here, but first of all, any questions in regards to that? Good. Okay. All right. So here we've got the Germany trade surplus, largest since 2021. Okay. So what do you have here? It says it widened to 18.7 billion in June 2023 from an upwardly revised 14.6 billion in May, beating market forecasts of 15 billion. Okay, it's the biggest surplus since 2021 as imports declined 3.4%, while exports edged up 0.1% higher at 131.3 billion. Exports to the EU rose by 1.3. Exports from countries outside the EU declined. Okay, so let me ask the group, right? Um, what does this mean? Is this positive news? What is the what is the trade balance? Uh anybody want to take me up on that question? Take a guess. No? Okay. So what that means when we pay attention to trade balance is a key fundamental data point. Is because a country's trade balance is dealing with the imports and exports, right? So if a company is exporting more goods and services than they're importing, that's a positive. That's a positive trade balance. Okay. So again, if a company exports more than they import in regards to goods and services, right? That creates a positive trade balance. Okay, everybody follow me on that. Drop me a one in the chat, please. Okay. So if a country is importing more than they're exporting, right? That can create just the opposite, a negative trade balance. Okay. So if you're exporting as a country, if you're exporting more than you're importing, meaning other countries are buying goods and services from you, what does that country have to do with their currency?
I'm taking a guess here, but I'm going to say to lower that currency's value. Is it
Right.
too valuable?
Right. So if I come into if you're right, and I appreciate your participation. If you are your own country, okay, and who is this I'm speaking to?
Apologies. This is Marshall.
Marshall. Okay, so if I come into if Benny's country comes to Marshall country, and Marshall country has its own currency, and I'm coming to buy products from your country with my currency. What do I have to do with my currency in order to buy your product?
Oh, you have to transfer it or exchange it.
Right, you have to exchange it. So in essence, I'm creating a demand for your currency, correct?
Correct.
Right. So that's positive for your currency. Okay. That's positive for your currency, increased demand.
Mm-hmm.
Okay. So the key thing that you want to pay attention to in this article, though, is that it says, right, that exports to EU countries rose by 1.3%. Right. So if the exports, right, because we look at it's the entire Eurozone that's under the euro since I think like 95, right? So they no longer have each country, right, in that Eurozone, they no longer have their own currency. They all deal in euros. So if the bulk of these exports from Germany are going to other EU countries, does that necessarily create a strong demand for the euro?
No.
No, right? So that's the key, right? So you always have to listen with the third ear and read with the third eye, right? And because it says here exports to countries outside the EU declined by 1.1% mainly sales to the US 0.2%, China negative 5.9%, the UK 0.2%, Russia negative 0.3%. You see what I mean? So while it's increased, the largest since 2021, you know, it hasn't necessarily been from countries outside the EU. So even though this is positive, does it necessarily create, a situation where you can see a strong bullish move for the euro based on this report? No, right? So we see
I
here eurozone.
understand.
You got it. You got it. Awesome. Appreciate you participating.
Yes.
Thank you. So the eurozone here, producer prices fall the most in 3 years, right? So that's a continue, right? Producer prices in the euro area declined by 3.4% year on year, right? So producer prices are starting to come down. So what is that saying? Yes, there's still work to do in the UK. I mean, in the eurozone, if in regards to inflation, because they're not near that 2% target yet, but it's coming down. We're starting to see the lagging effects of the interest rate hikes thus far. Which, when you go and you rewind, right? We saw that President Lagarde, whereas they have been definitely, confident in leading up to the last meeting that, hey, we're hiking rates, we're hiking rates, we're hiking rates. Leading up to the last ECB meeting, you had a couple ECB members say they struck more of a dovish tone. And then finally, when we heard from Lagarde at the last ECB meeting, she struck a dovish tone. They're going to be data dependent moving forward in regards to further rate hikes. Maybe at the next meeting they take a pause. Okay. So this just plays into that. Italian private sector eurozone shrinks for the second month, right? Contraction. Okay. So Spanish, okay, private sector growth continues to slow. Okay. So when we talk about the euro, how it's been so bullish, we see that euro is correcting now, right, to the downside. Okay. So sometimes when we're trading, is it helps us in our trading with our confidence in regards to if we understand why the price action is moving in a certain direction. And it could kind of give us, an idea as to maybe how long this may be correcting, right? Or if this is going to lead to a possible trend change, right? These fundamentals, right? These are the catalysts for the market and the price action that we see on the charts. Okay. So if you ever want to see where interest rates are, okay, you can scroll down on trading economics. It's like a one-stop shop, and you can see the current interest rates, inflation rates, everything for those key fundamental drivers. They're all right here. Okay. And you can go in and you can press deeper into this if you want. Okay. So when you talk about GDP growth, everything, it's all right here. Okay. So you could go to GDP, you could go deeper into the GDP, you can go as far as you want. Okay. In regards to the GDP. Okay. So definitely some things you want to learn about, not only for trading, but this impacts your life as well. Okay. So just a few things this morning I wanted to cover on overall fundamentals. Now, the UK, the current interest rate is at 5%. They're expecting 5.25. One of the things when we started to see the CPI data and things like that come down for showing that inflation is slowing, still high. They have the wage inflation is very, very sticky in the UK, especially coming out of that London area. But there were calls for a possible 7% in regards to the ceiling and the cap on interest rates at 7%, right? As high as 7%. Now it's come down to a possibility of reaching the max level of 5.75%. So we're at 5% now, so you're looking at 75 more basis points, anywhere between 25 and 50 basis points expected today. Okay, so hopefully that helps some folks. In regards to understanding some of these reports, and we'll continue to cover these in detail. Any questions? No.
No, sir.
All right. Good morning, Ryan. How are you?
Good morning, bro. I'm doing all right, man. Been even for morning already.
Yeah. I know. It's all right. I got your teamwork makes the dream work.
I appreciate you stepping in, man.
Yep. No problem. I'm recording this because it's some technical issues. I'm recording it to the cloud, and then we'll just put the link um in the back office.
Okay, perfect.
So yeah, we'll put the link in the back office. So if you guys need to watch the recording and be in the back office, it won't be on YouTube this morning. So that's that. So Ryan, anything else on the fundamentals that you might have caught overnight? I know your morning's been hectic so far. So
No, sir. Just waiting on that news at 7.
okay, cool. So let's take a look at the DXY. Right, we're still moving along. Right, we're still getting dollar strength. Okay, good data recently for the United States. So we're kind of in this range. We still got that crown drawn. But we're ranging right now. Right, still ranging around that right tip. We hadn't gotten above this weekly level. Which there's another one here. Right, that's a couple levels. Since this range has started, that we need to pay attention to now. So there, take that down, and here. Okay. So we're just bouncing around, showing strength right now, right? So we take the market for what it is. All right. So there we are. This is moving back up in the range. I'm gonna take this off on the daily. Till it makes its mind up. That's where we are. Got dollar strength. And this is our daily level that we came off of. All right, cool. So that's the dollar. So the dollar is pushing long. Now we're on the heels of non-farm payroll tomorrow. So we'll see what happens with that tomorrow. And don't be surprised if later, this afternoon you start to see some slowing in regards to the dollar in as it relates to this bullish move, if it starts to just slow down and move a little bit sideways ahead of the major report tomorrow. So right now, pushing long. Okay, that's clean. That's a clean move to the upside on the U.S. dollar. Any questions on the dollar? Reese, you were right on the money with that. I forget the level that you said you were bullish above. I forget what it was, what level that you said, but you were spot on with that dollar move. 100.82. Yep, and it's been moving ever since. So great call on that one. Great call on that one. I love this group. So good stuff. Good stuff. Let's take a look at. I want to look at this S&P. Take a quick glance at where we are. Then we're gonna jump into these pound pairs. So you can see we've got a bearish week so far on the S&P. So it's correcting, right? The market moves in waves. Is it bullish? Yes, but overall the market moves in waves. So we're in an up retracement zone. That's an 80-20. Okay, the market's moving to the downside. So we were talking about this last night. It's right up here in this 118, 127 zone. It's rejecting off that monthly resistance, and we're moving down. Right. So this is no longer active on that sub fib to the downside. That's an ABCD move that got completed. We'll see if it wants to continue to push down on the 1 hour. Okay. There we go. So this is where we had this S&P marked up at. And on the 1 hour, we're coming in on this smaller wave. We're coming in on this 382 target. That's how it works. That's how it works. So that's why we don't fret when it comes to trading the counter trend move in our sweet spot. Okay, we just don't trade against the trend all over the place. We traded in a certain area. Okay, and that's where we're at. So that's been a good move to the downside. If you're waiting to get long on the S&P, see if we can come down into our sweet spot. Okay, right. If you're into buying dips, see if we can get it down in our sweet spot. Okay, at least that's what I'd be looking. Okay, so that's that on the S&P. Any questions?
No, sir. Actually done that. So can you go back to the 4?
Go back to the 4. Yeah. Yep. $8.20 on the 1 hour. You talking about this S&P, Reese? Yep. Right on the money. That's it. Donette, you got a question on the 4 hour chart? You just want to take a second look at it?
Yeah, I mean, I just wanted to see where the 382 was on the 4 compared to where it was up on the 1 hour. Thank you.
On the 1. Yep, you're welcome. All right. So we know sometimes, right, we have that alternating correction where we've got a very shallow correction here that accelerated off that 382. So now sometimes when you see that, sometimes you'll get a deeper correction on the next bid. So we'll continue to watch, see what happens. We'll take a look at the NASDAQ real quick.
Straight.
You see that is correcting as well. That's a daily chart. So we're correcting right off that B boundary, right? But it's a similar move in a sense. When you look at what it did, right? We're pretty much Gartley, right off that B boundary, right? With that ABCD move there. Okay. So just moving down through the charts, there's that correction on the Fib, see? We're moving down. That's just shot at 786. So you're looking at the extension there. Okay. And then here we are on the 1. Where we had the markup with the targets. Set. There. Right. So that's spot on the money on that correction on the NAS. Any questions on that? Okay. So that's two 80-20s in a row there on the NASDAQ that played out. All right, so let's look at take a look at the take a look at this US 30. Okay. We can see, right? New AB boundary has formed. On the daily, we're correcting off the B boundary. You move down to the smaller wave, you got a higher push up. Right around that 118, 127 zone, right at the edge of it. And right now we are correcting. So we'll see if we get a continued move there. Okay, so here's the support level, daily support. Let's see what happens if we make it down to that support. If it's going to hold and push up higher in that zone, or if this is going to continue to reverse and continue this downward path or correction. Okay, so here's your 1. So they increased rates 5 1/4 on the pound. Okay. So here's the 1 hour, right? The 382 target set up on a US 30. Making its way down. Okay. So those are clean 80-20 moves on that. So let's jump into the pound, see what's going on. See what our reaction is. On the pound, 25 basis points, I got a feeling is already priced in. So we may see prices stall and see a correction, not sure. But that's what I had in mind there. So this is the weekly crown that we were playing. We're almost to the extension on the weekly, right up in that zone. Okay, so overall it's been bullish. We know the Aussie's been weak. And right now we're looking at the daily. Okay, we've got a 50% pullback, and you can see right now on this daily candle, okay, we've been bearish so far today. Okay, bearish to neutral. And if we come down to the 4 hour, right, we finally, Ryan, hit the D extension. Congratulations if you held it. We know we kept getting rejected at this 1922 level, which is a monthly level, but it finally pushed through. Fibonacci sequence. Right? We see our fib is no longer highlighted. We don't know the road that it's going to take, right? The twists and turns, the U-turns, all that good stuff. We don't know how long it's going to take. But if that uptrend is going to continue, it's going to get there. This is our 1 hour. Okay. Our smaller wave sequence. Okay. That's that 4 hour D extension that was hit. This is that weekly extension. It's trying to get there. So what we want to see is we've got a 4 hour extension hit. How far do we correct? Or is it gonna make a U-turn and just go ahead and chase that weekly extension before, you know, we make any type of major correction, right? But we haven't really retested the 1922 level that we broke through, right? That it took some time, right? It broke above it. Here it crashed. I don't know if everybody remembers that, right? It crashed, and then it pushed back through. It came back below that 1922 level, and then finally it broke above. All right, so this is the 4 hour. 4 hour 1.618, the extension, that larger thing. And you can see where price is stalled and correcting. Okay. All right. So see if there's anything on yet. Increase the 5 quarter. So let me. Okay. So here's an article here. This is the rate statement, right? And so we'll put this in the chat for everybody. There you go. So that's the pound Aussie. Okay, so you're getting you're getting a reaction to the downside, right? Which is what we talked about earlier as a possibility with 25 basis points. So we'll see how far it wants to push to the downside before settling out. All right. Any questions on the pound Aussie? Nope.
No, sir.
All right. Take a look at this pound CAD that's doing the dance. See if it's going to push further down in the zone. What do we look like here in the weekly? All right, we're moving short right now. Okay. Yeah. So we'll see how far if we take out that low. It's just been ranging. So that's where we are. We know we got a 382. We know we've been ranging, and you can see that downward pressure coming in. Right? Getting a lower push in our zone. Okay. The initial reaction to that data. Okay. So we said, hey, if we see 25 basis points, don't be surprised if the market reacts, right? Bearish and pushes down. Okay. So you're not seeing that huge thrust to the downside. I mean, US markets aren't open, aren't open quite yet. But this is what we look like on the onset there, right? So there's that low. Okay, so the first thing you think about is, do we hold at this low? Okay, if not, we push lower in the zone. All right, that's the game. So here we are on the 1 hour. Okay. So right now, we're not seeing a crazy accelerated move. You guys know sometimes we got fundamental occurrences and all of a sudden you get 150, 250 pip drop, to the downside. But right now, this is just a gradual move. Like I said, US markets aren't open yet. It's just the beginning. 7 o'clock just hit. So we can see it pushing bearish there. All right. So I know if that's moving bearish, this pound Swissy is continuing, to move to the downside. Okay. In that range, moving towards, here's that 109.99 support. Okay. We know this has just been range bound for the most part. So neutral to bearish. And you can see, right? So this is one that I haven't played with at all, right? But we'll see, right? If we get down to this monthly support level. Here's another daily level just before. But it's just been ranging, okay? You've had typically you get two strong currencies. This is what will happen. We know the Swiss has been strong on the heels of what the Swiss National Bank has done with the currency in regards to selling off a lot of their foreign currency reserves, okay, to strengthen the Swiss franc to help combat inflation due to energy costs, okay? And so we're getting that push down right now. So we'll see what happens. It's a possibility that we've got a stochastic, right, that's in the sell zone. Okay. So in essence, we're overbought. So that momentum, any upside momentum, any bulls that were in the market pushing that price up, that creating this range, right? They may be giving way now, right? The bears may be coming in and take over. But we'll watch this key level here because it's been a major zone. Okay. So as we just move down, right? I just been watching this horizontal support and resistance because it's just look at the chart. Okay. It's moving from left to right in the middle of our screen. Okay. It's not moving from bottom left to top right, or top left to bottom right. It's just moving sideways across the screen. Okay. And we're just pushing bearish. Right? You can run a fib if you're trying to get a target, you can run it off that high of the range. Okay. So based on that impulse leg down off the 4, right? 61.8 pullback up against daily resistance. That's the downside target there. Okay. So based on that fib, that's expected to potentially break. See if that happens. That's been a pretty strong range. Okay. Any questions on the pound Swiss?
No, sir.
All right, market moves in waves. You see this is ranging, but even in a range, right, it moves from bottom to top, top to bottom. It's going to do it in waves. So you can find any impulse leg, right? So if you caught the bottom of a range, okay, you can run your fibs in that range, okay? Hey, try to catch your waves. This has been super choppy. It's not the best example. But there you go. There, right? And then your wave fell at the top of that range and pushed down. So it took out your A. So you flip your fib to go the other way. And we're on our way down. Okay. But this is one that I haven't had my eyes on too much because it's been in such a choppy range. All right. So let's go. Let's take a look at the GJ. All right, corrected, moving bullish. That's a monthly fib. Look at that. Okay. So this is moving bearish strictly as a result of the fundamental data coming out of the UK. Okay. 25 basis points when expectations were growing for a possibility of 50. They came through at 25, which means, right, we've got some relief going on. Folks taking profit. Okay. Because that 25 basis points was already priced into the market. Okay. That's what was driving the pound to the upside. So here we are, new AB boundary on the daily. Okay. New AB boundary on the daily. This is a new daily support right there. Okay. Boom. Okay. Go to move that down. Okay. Here's that crazy move that we got from that correction in the yen. Okay. And here we are, right? It's moving flat, moving to the downside. So when we move down through the charts, what does that impulse leg look like to the upside? And you can see how that reversed clean. Did we hit the D extension? No. Is price returning for a deeper correction? Yes. Okay. So we want to eye up we want to eye up this zone right here. There's 179.44. This is bearish because of the result of what happened this morning, not because of anything that Japan is doing. Okay. So when we get to this level, right? If we hold from this 1 hour chart, maybe we get a bounce. We'll see. We'll see on that. Okay, on this fib. So this is one you want to keep an eye on. This one is already moving down. So if you played the 80-20 on this, yes, you're in drawdown. The way we trade, do we worry about that? No. Why? Because we've already calculated our risk before we started. So we already know that there's a possibility of drawdown. Okay. So if you entered at the 127 zone, okay, if you put your stop, the extension, get stopped out. Nope. Nope. Unless you deal with a broker with a ridiculous, crazy spread. There's no stop out there at that level. And you're returning. So yes, you got drawdown, but now you're in profit. We trade small. It's 188. Where are we at now? 153. You set it and you forget it. Now, if you're playing it with a tighter stop loss and you're looking for confirmations, these are the ones that could give you a headache. Why? Because it pushed sideways. It pushed up, and even if you got a trend line break, it started moving sideways. Okay. So sometimes, hey, it's just, especially depending on your lifestyle, and you can't be in front of your charts, sometimes it's better to play the probability and play your zones. Right? Play your zones. That just came in. Is that at a 382 yet? Almost. Right. Close enough to target. Okay, so on this particular play, okay, risking 100 pips, right? That target is about 200, so that's pretty much a 2-to-1. It's pretty much a 2-to-1 on that setup, with the possibility of a further move to TP2. Okay? So if you're trading this and you're managing this trade, what do we do? If somebody was in this trade, okay, and we've got 2 targets. We know we've got TP3 at the 8 boundary, but we've got 2 targets, and now we're up close to 200 pips on this trade. How are we managing this trade? If we said, I want to take take your money, take your money, right? Okay, that's a good one. Take your money. Okay, so let's say I wanted to try to stay in this game. We just got this news that pushed the market bearish on the pound, and I wanted to stay in the game. I'm up close to 200 pips. What are my other options on this trade? What can I do? Donette, take your money. Number 1, right? What else can I do? Move stop loss to break even, move stop loss into profit. Okay. So if I move my stop loss into profit or I move it to break even, do I take some of my money off the table at this point? Joyce said, no, you're gonna hold that. You're gonna hold that. You have 200 pips. You're gonna leave it in the game to TP2.
I'm gonna hold it to my goal, and then I'm gonna let it play out.
Yeah, let it play out. Okay.
Because my goal is at least 100 pips. So if I'm up 200, I'm at least moving profit 100 pips and let the rest play out.
Gotcha. So you're gonna see okay. So you're gonna leave 100% of that other half. You're gonna leave it. So you moved it down to 100 pips in profit. Got it. Okay. So if price moves back on you, you get stopped out. You still made 100 pips.
Yep.
All right. Okay. Christina, take some of your money. Okay. So that okay. I like that play. That's me, right? I'm gonna take. I can move my stop down 100 pips in profit. Okay. Like Joyce said, that way I at least lock in 100 pips. But I'm probably at this point going to take half to 3/4 of the trade off. So the other quarter that's running, I'll leave it running. And if it gets me to TP2, good. If not, like Joyce said, it stops me out and I got 100 pips on that other, right? But I'm gonna go ahead and secure the bag. All right. I know where you're coming from, Joy. Because you're in, right? You can't cut that in half. I got you. Yep, I got you. At this point, I can dig it. You can't reduce that. All right. These are right. We have to think about how we're gonna manage our trade. We have to think about that. Okay. Any other questions on this pound yen move? Okay. Okay. So we can see here too how this has just been moving. This area here, right? We were trending, and then we just got caught like this. Okay. And the reason why we ran this fib off the low is because it was a huge impulse move after the downward lead, the downward push from the Bank of Japan news that had came out. And you can see how it just reacted, kept pushing up, right? So we just ran it off that impulse layer to the upside to see if it wanted to correct it, then continue on. Okay. That's the GJ. Pound NZD. Okay. It's been a mess, right? This is a weekly, still within this AB boundary. It's pushing long. We're right back at this level of that 210. It's having an issue here. Okay. It's having an issue at 210. Look at this. Right? Look at that huge wick. It's from way back when. And it came back below it. And it's been rangy ever since. But we're right back at that level. Okay. So here we are on the daily. Trying to get to that D extension. Been a tough ride. Okay. Been a tough ride. It's been bullish, but it's been a choppy ride. Which this is how the pair goes. Okay. So right now we come down to the 4. You can see how we've just been in that zone during the dance. Okay. We missed the 382 target. Okay, we pretty much double bottom there and we took off, but we've just been ranging. So you just have to think about, are we gonna move back to the bottom of the range? You know, who knows? This one I'm not playing, right? Just wanna go over it. Okay. But it's super choppy. I expect it, right, to eventually go to that D extension, but I don't know how much it wants to correct. It seems to be holding. That's tight. That's tight there. Ryan, are you playing this? Are you still holding this long? Or you're
No, I'm
out?
not.
Yeah, I'm not doing anything with this one. Done with it for now. So I don't really have a play on this pair. Okay. So let me look at something real quick. The third straight day, dollar index ever. Time local dollar alongside the Aussie continue to be on the defensive. Reserve Bank of Australia. At home, Wednesday's release showed that the jobless rate in New Zealand hit a 2-year high. Q2's asset market forecast of 3.5%, limiting the downside momentum. Unexpected rise in service sector last month. China, New Zealand's main export activity during summer travel season. So that's kind of mixed on that New Zealand dollar. All right, so we'll see how that plays out. Maybe the 4-hour high and look to continue, but no play on that. Let's look at the pound dollar to wrap things up. And this is what it looks like from the weekly. Okay, we have been moving long. Okay, we're right here in this zone. All right, this is some 10,000 foot view. Okay, we could get past resistance, become future support. We shall see. Right now, okay, this is where we are. We had just shied at 382. Price is reversing. Now we broke this trend line. Okay, so we haven't had a deep correction on the daily. So the question becomes, what's going to happen at this? All right. What's the reaction going to be at this support level? Don't know yet. But, okay, we've been involved in this move to the downside off this 1-hour setup from a while ago, right? So this is pretty much heading to TP3. This is already 340 pips to TP2. So this is what we mean, like from week to week as swing traders, right? We're not dealing with, 5 and 10 pip trades. So there's not going to be a setup all the time. A lot of times it's just staying involved in the setups that we put forth a week ago, week and a half ago, and looking to add to those positions, right? So that's a 340 pip move there. The risk on that was 125, with that stop being at the D extension. Right? So you guys can see trading small, and again, it depends on your lifestyle, and looking to accumulate the pips, okay, pips and percentage. And whereas trying to time the market sometimes, especially again, if you can't be in front of your computer, can oftentimes be a headache. It can be stressful because I'm trying to time this move here off of a trend line break or off of, sometimes that can get hectic. Look what it did before it dropped. So maybe you ran a tight stop, you got stopped out. If you're good with that, fine, right? But this is moved well over, like this is off that 127. right? So yeah, we caught drawdown, but then look at the return. So this is down, where are we at now? It's like 425 pips. Right? Like 425 pips, depending on where you got in. I mean, and it's not like it's been running. It hasn't taken a long time to really get there. Right? So it's like I could be in and out of the market, more transactions, more exposure to the market, you know, for what was that TP2, 340 pips, 10, 15 pips at a time, where I could slow down to speed up in essence. I could trade smaller, right? Give myself a little bit more room, a little less headache, and just let the market do what it's gonna do. Because sometimes with timing and things, we're trying to perfect an imperfect market. Sometimes that can drive us crazy. Right? So something to think about. Right? Something to think about. When you're trading and you're learning more about yourself, you know, you're trying to figure out what type of trader that you are. Okay? But sometimes I know it was like, you know, when they talk about a lot of times when you hear about people who are addicts and things like that, and a person, you know, may take a drug like a cocaine for the first time, and then they spend the rest of their life trying to get that high that they had the first time, and they never get it. Sometimes that's how we are as traders. If you come into this game and you taught to trade a certain way, and maybe you hit it big on the first one, right? Off of a quick scalp, and you might have been over leveraged, and you're like, man, I hit the jackpot. It's kind of like being at the casino. And then you spend the rest of your trading career trying to chase that first high that you got, right? And you lose it all and then some. So these are things, you know, that we have to think about as traders, okay? Because we want to be pros. We want to be pros. We want to be trade pros. So uh that's the pound dollar. Any questions on these pound pairs?
No, sir.
All right. We got a few minutes. Any other setups, right? I got time for maybe one. You know what? Matter of fact, sorry guys, not gonna take that. Because I keep forgetting about this. Let's do everybody.
Yeah, I keep forgetting about this one too.
Let's play around with this dollar mix, okay? Before we uh before we close out the session today. How about that? Everybody cool with that? Drop me a one in the chat if you're good. All right. So let's do this. So this is the daily. Let's manage our layouts. We're gonna go with our monthly. Okay. So you guys can see, right? Especially some of our newer folks, how go about setting up the chart. So open up your new workspace, US dollar versus the Mexican peso. I'm going to use my monthly and my weekly chart interchangeably. Then I'm going to add USD in for the daily. And I'm going to add a 4-hour. 4, and I'm gonna add the 1. There. Okay. Same approach, right? To the okay. So this is my monthly. We're gonna come in here, we're gonna frame this market out. Same approach every time. Matter asset class, matter. Okay. Mark my high. Like to use a solid black line like this. Okay. Received high and low. It's a monthly chart. I want to mark my monthly support resistance. If you are using Smart Trader, it makes it super easy. If you're using Trading View, that's cool. Just identify your swing highs and your swing lows. Okay. Talk about that in the training because that's what it's doing. Okay. Swing high, 2 candles to the left, 2 candles to the right, center wick high. 2 candles to the left, 2 candles to the right, center wick high. Those are your building blocks in this market, everybody. Support. There's the low. See how possible that is? See how it's taking that out? That was a low there before, right? You had a swing low there before. Price took it out. That's why Smart Trader's not identifying. Okay. So here, okay, this is the monthly support. So look how clean that move is all the way down, right? Clean highway there. So we mark our monthly levels. I use black. You can use whatever you want. Okay. There's a monthly level there. I'll mark this extreme low there. That's all we need from this chart. I use the monthly and the weekly interchangeably. So I'm just going to go up here and click, go down to my weekly. Okay. Okay. And you may ask, like, well, why it took these levels out, right? Had you had your chart marked up before, you would see it. But guess what? As price pulls back, it creates new relevant levels of resistance. Look at that, right? So these are the new levels on the front side. Okay. So now we see our monthly levels there. Look at all these levels in between for the weekly. Okay. We're going to use blue. I want to mark this level. Okay. I'm going to mark this level. Here. I'm going to take this level like that. Okay. So now I've got my monthly and weekly support and resistance levels. Okay. And take a couple. This is more like a zone. So I'm going to do it just for good practice. And I'll take this level right below there. And you'll get a feel for what you want to do. Take this higher one. There. Now, once I'm done, I want to take my smart support, smart resistance off. And that's what it looks like. Okay. Now I can run a fib just to see long-term targets, right? This is moving down. Could be coming into a weekly 80-20 zone. We get a bump and a pushback to the upside, right? So this is just your fibs. We always say, adjust the tuxedo, right? Or the fancy dress, the gown on the price action. So we know it's still all about structure, support, resistance. But this just adds, so all levels aren't necessarily equal. So if I could dress this up a little bit and put a fib on it, and I know this is one of my sweet spot zones, I say I've got weekly support here, a zone. And then on top of that, I've got a down AB fib running because this impulse move has been to the downside on the dollar vex. And so I've got an 80-20 zone right in line with the support. So maybe this holds and I see a reaction to the upside. Okay. So that's how we think on that. So I know that. All right. So what I'm going to do now, though, is I am going to right click, link all objects to the lower time frame. Boom. Okay. All objects. So all my support and resistance levels have now moved down to the chart. Everybody follow me so far on that? Yes or no? Yes. Okay. Awesome. All right. Now we're gonna come in here. We're gonna mark, right? These support resistance levels, and we're gonna use smart support and smart resistance. Why? Because it just speeds up the process. That's why we could do so many pairs. Okay. It's not that we can't find it on our own. It's just like, hey, I use a remote for my TV, and it helps things move along quite fast. So I'm going to do the same thing with this technology, right? I'm going to use it because it helps me to become more efficient. Now, once I get down to the daily chart, I'm not going to continue to right click and link all objects because I already have my weekly and monthly levels down on my 4 hour, my 1 hour, my 15, my 5, whatever you choose to trade. So now I'm going to start taking these levels and doing them one at a time. So on my daily, I'm going to right click, link object. I'm going to right click, link object, just like that. Okay. There. Take this off and take this off, right? So now if I go down to my 4 hour, I see these levels. So even if you are just a support and resistance break and retest trader, the way we teach you to do this can help. Okay. If you don't want to put a fib on your chart, you can see these levels. Everybody follow me on that. Drop me a 2 in the chat. Okay. Even if you trade on your 5-minute chart, your 15-minute chart, your 1-minute chart, right? And you're just structured. Hey, Benny, I use naked charts. I don't use any indicators, nothing. I just want to trade the price action. Well, this is a great way to properly mark up your support resistance levels. Okay, so this has been moving down. Okay. All right. Look at what happened. Look at what's happened with this price action. Okay, on this. Okay. Look how I can't look. Oh, we're gonna catch it before we keep moving. Look, we need to test it to see if it's real. Okay. We're taking out this high. So do we what? Break? Do we hold at this level? Or do we break and retest this level? Okay. All right. The fib is just helping you to see the larger overall. That's all. But it's still about price action, support, and resistance. We look at our 1, right? Now I've got everything marked up. Okay. All right. So now we clearly see, has this market been moving bullish or bearish? What has been the trend on this market? Somebody tell me. David, you love naked trade? Yeah, it definitely provides a lot of clarity, right? Awesome. This market has been moving bearish. Okay. So you can say whatever chart you want to trade on. Okay. Again, we look at all of these levels and we drop fibs on all these levels because we know we have people that trade on different charts. But you could say, I only want to trade off my daily chart, so I'm only going to run fibs on my daily or on my 4. However you want to ride this wave and figure out where you are, right? So boom. That's what that looks like. Okay. You saw on the weekly that we had an 80-20. There's our D extension. We haven't gotten a 382 pullback. We know we've got a dollar that's bullish right now. Do we continue to make higher highs and higher lows? Okay. Okay. So we could come back, zoom out. We could come all the way down on the 4, and we could run these fibs on the smaller wave, see what it looks like. Okay. Now we've taken out some highs. So the question becomes, look at these highs that we're taking out. The question becomes, can I catch a wave and is this going to continue to move long? Right? We know we just hit an extension. So as I move down through the smaller waves, can I get an AB boundary reset? Now, you can run your fibs here from the 1, okay? Chase it if you want, or you can say, you know what? I seen it on the 4, seen it on the daily, I seen it on the weekly. I'm looking to play this bullish move, and I'll show you guys in a second. I just want to walk this all the way back. See where this highlights the most recent bid. Make sure you're right on the mark. Forward. All right. Now there's ways you can pinpoint this from the higher time frame, but I just want to do this for good exercise, right? For those of you who might be at the beginning of this journey, okay? Boom. There we go. So that's where we are. So the question becomes, right? So you already had a smaller 80-20 play out here off the reversal. So now if we continue that dollar bullish momentum, we're going to take this A out. Okay. We're going to take this A out if it breaks through the top of that range. So what I'm going to see is, right, again, we don't have a new AB boundary yet. So we want to see, which I think it's going to do. I think it's going to continue bullish to that 1739. So on the 1 hour, I'm going to take this out because I expected to take out that A. Maybe I'm wrong, right? Based on those fibs we've seen from the higher time frame, that 80-20 zone. And we've got bullish momentum off the dollar. Now, can this change tomorrow? We got to keep in mind we got non-farm payroll tomorrow. So if those numbers come out and disappoint, you may see a bearish move in the dollar. But for right now, this is making up ABCD waves. So what I need is a new, right? Because I haven't caught this from the beginning of the move. I need a new AB boundary to form. If that's going to be my high, and I want to see this move just like this. Pull back and take. Or you can say, you know what, just price action structures, support resistance. I don't even want to bother with this fib here, because if it's going to continue to move long off the 80-20 from the higher time frames, it's got a ways to go to the upside. So what I want to do is, because it rejected here, you may say my idea is I don't want to take this first wave that breaks this level. I'll catch it after that, because in essence that puts you in a break and a retest, right? Like so. So maybe I let this one go, and then once it pushes up and breaks that level, then I'll look to jump it and let it retest that weekly 1739 level, and then get long like that. Okay. So you can kind of build out a forecast of what you may want to do and game planning for this dollar base. Any questions on that? How would I trade it on the 30-minute? Okay, well, let's do it. And then we'll wrap things up. So Take this. I was gonna say- Okay, so what I want to do is you can either drop this down to the 30-minute, or you could just manage your layouts and add a new 30-minute chart, depending on the package that you sell. USD, MXN, this, and we'll make that 30 minutes. There's my 30-minute chart. So what I could do is I could come in here. Just happened there. What? There we go. So what I'm going to do is these fibs, I want them to come off like this. And then all I'm going to do, because I have a new 30-minute chart, I'm going to take those same levels and move them down. Okay. And like so. So 30-minute chart is just a smaller wave, right? So you still come down. I'm on 30-minute. Right? 30-minute, we got a smaller wave, so I already have a new AB boundary. We're just shy of a 382. So again, it puts you in the same scenario. Nothing really changes, right? The only thing that changes, the waves just get smaller. So if you get a push down, okay, you can say, you know what? I'm gonna take a shot at that long. I'm either putting my stop below the C or below the A. Okay. If you take the idea like we just talked about on the 1 hour of I want to see it break this level first, then you can possibly wait, let that D extension get hit. Whenever price forms a new high after hitting the D extension, then you can look to make plays on it, right? So if price accelerates and moves up and we form a new high somewhere, you get a new fib, right? Our C becomes our new A, our D becomes our new B, and then we can look for the pullback. So nothing really changes, right? That's the beauty of what we teach. It's just you're doing the same thing, just on a lower time frame. Okay. Like that. You can see, right? How it's just doing the same thing. So if you run your trend line straight through like this, you see, look what happened. Take this out. This is what transferred down from it. Right? So we take that off, and you can see like your trend lines go through your lowest point in the trend. This is my lowest point. So here, there was my second touch of that trend line. There we go, like that. Right? And depends on how aggressive you want to be. Here's the low. You want to work your trend lines through that low. It was another opportunity. Bang. Yeah. So had you been playing this, I got an 80-20 from the higher time frame. I'm running the daily support. There's your, if you like tight entries, there's your entry off that 30-minute. Okay. Stop here below the low. You've been bullish ever since. Inner, outer, long-term trend line has been broken. Good on that, everybody. You're welcome down that. Meaning to get to that for a while. All right. You're welcome, Eloy. All right. So that's that. So no matter what the pair, it's the same approach. Right. And right now we're moving long. Okay. So had you been involved in this dollar mix and you identified those lows coming from your higher time frame, and you identify, hey, I've got good confluence with the 80-20. I think I'm going to get long. You would have been right. Okay. Ryan, anything to add before we wrap things up, sir?
Man, nothing to follow that, bro. Great session. Appreciate you.
You're welcome. Any other questions? Okay. So that's how you do, right? At least in the inner circle. That's how we do top-down analysis, right? So we came a long way, right? And that's what we came to. All right. Again, reminder, you're welcome. Thanks, David. Appreciate the happy birthday. Reminder, yeah, it is my birthday, so no Asian session tonight. We'll be right back at it, 7 a.m. Eastern Standard Time for the weekly Forex ritual. I hope to see all of you there. Thanks, Carla. Thank you all for the birthday wishes. Have a good day, everybody.
Thank
Thanks,
you.
Nanat. You're welcome.